Punch it.
Hey everyone, this is Steve Rozenberg and Alex Osenenko with the Lions Den. I got it close. I'm close enough. Yep. We are here with our podcast, episode number 2, with the Lions Den of Leadership. I know Alex and I are still tossing around which one we want to call it, but we'll say I win because I'm the one doing the intro. So anyways, we have a very, very special guest today, a good friend of both of ours. Alex probably knows him a little better than I do, but I'd like to call him a friend as well. Just a supercharged maverick out there, just getting stuff done, let's say, in the business world, which happens to tie into real estate. And so the reason that Alex and I came up with the concept of this show is there's many people like me and like everyone out there that is a business entrepreneur that is trying to figure out how to get shit done. Because unfortunately, the operator in us does not mean that we're going to be successful entrepreneurs. And I am learning, as I think all of us do, is that being busy does not relate to being successful. And it's a challenge I think everybody has to balance. And Alex and I talk about this much. And so we want to get other business owners on the podcast to discuss day-to-day challenges that they deal with and how do they handle balance of life and balance of success and how do they get punched in the face on a regular basis and get back up and deal with that. So we've got a good friend, Jordan Muela here with the CEO of probably about 15 companies. I know it's LeadSimple and Profit is he's got all these profit names that he's CEO of. So Jordan, thank you so much for being on with us.
Gentlemen, pleasure to be here as always.
Yeah, lay on us, Jordan, the sort of the enterprises of Muela, the Muela enterprises. What do you got? What are you working on today? Where are you taking them?
So just to be clear, it's only 4. I don't want to take too much credit here. There's 4 entities. We have the original ManageMyProperty.com lead gen shop. That's kind of behind the scenes, still running. We have LeadSimple.com, which is the SaaS product, the sales-focused CRM for property managers. We have the PM Grow Summit, which I run with my partner Alex, and most recently, PM Profit Coach, which is an outsourced CFO services company for property managers.
Wow.
So you are in the heat of the real estate world. You're in the belly of the beast, if you will, of everything going on. You're not just talking about leads. You're not just talking about CRM. You're getting in down and dirty with the CEO side, entrepreneur side, and then you guys are wrapping this up in a huge bow at a convention, essentially. Is that safe to say, Jordan?
Yeah, trying to get all the way down in the weeds. A while back, I used to be really on talking about what I wanted to talk about, what I thought was interesting and useful, my best practices. But as time goes on and you really commit to the customer, you realize that if you're really going to be all in, you have to pursue the deepest felt needs of your customers. And so that's kind of guided my journey over time in starting these different companies.
So, Jordan, let me just dig. I'm just going to start off and dig in here. How long have you been doing this? How many employees do you have? And do you separate them out through the different entities? And what area do you cover?
I've been doing this for about a decade, and believe it or not, we only have 1 full-time employee. I have a business partner named Chris in the first, where we're 50-50 in the first 2 ventures. I've got a part-timer that runs Manage My Property. We have 1 full-time staff within LeadSimple, although we're actively hiring right now. PM Grow is largely Alex and I plus contractors. And then on PM Profit Coach, there's about 3 other staff that are working in there. And in terms of separating it out, Chris and I cross these lines, but otherwise everybody's siloed.
So would you say that you're more of a systems company? Because in order for you to grow and do all this, I'm assuming you've got to be a master at these systems to have them run without you being there.
I think that a lot of it has to do with the business model. If you're running a service-based business, systems are paramount. If you're running a software company, simply by nature of the business model, there's going to be more leverage associated with it. So with lead gen, It does not require a lot of management. The systems are represented by tech. Same thing with the software company. We work on it actively, but that's to grow it, not just to run it. With PM Grow, that's a whole conversation about some of the systems we still need to put in place there. And then with Profit Coach, that is the biggest kind of systems gaping hole that I'm trying to plug right now. It's the first time that I've done full-blown consulting, and I'm feeling the weight and gravity of what you're saying about the importance of systems in that area, Steve.
Yeah, because let's just take the consulting thing, because I've done that and I help people and stuff, and you're basically trading time for money at this point, because you're basically giving them what's in your brain, and you're sharing knowledge, and you're helping them grow, which is great. But I don't know if that's an exponential ability, because if you hire coaches, they're buying Jordan and they're buying Jordans, but not necessarily these coaches are Jordan. And so do you have a challenge with that, where maybe someone says, hey man, I thought I was getting you, I'm not getting Jordan. And you're saying, well, I only have so many hours in the day. And how do you balance that as the owner of this?
Yeah, so I haven't fully run into that. I mean, people are still getting Jordan right now. I'd say in anticipation and preparation of that, what I am doing is taking each individual engagement and turning one-off conversations and solutions into IP. We addressed a circumstance where, for example, the specific business need was related around cost. Labor on average is 61% of revenue. In this organization, let's say it was 70%. It's totally out of control. We have to first analyze it and then address it and then take action. The way I do that in a one-off basis represents the opportunity to systematize that. And so that's what we're doing. With each bit of IP we create for one client, we're standardizing it so that it's applicable to all clients.
Okay, so you're a master at the other ones. I'm going to dig in on this one a little bit, if that's okay.
Hit it, man.
This is the entrepreneur's dilemma, right? You have a great idea.
Yeah.
Now you're figuring out how do you scale it and systemize it, right? Without you being there.
Right.
So I guess the first question is how big can you grow right now with the systems you have? And I'll even take that back to your other businesses. The question being is, were those other businesses' systems the same as they are today?
So I'll take that first part of the question right now. I would say our ability to scale right now is pretty limited. I'm running up against that wall. We've got about 20 clients right now, and we're doing some other contract work. We're working with NARPM right now on the national accounting standard for property managers. So I've got a lot on my plate, and we're running up against that right now. So here's, I think, the nut of that question. It really goes back to the business model. Is the business model long-term to scale up consulting or to scale up financial services? What's become clear to me over time is that the financial services, i.e. traditional accounting, tax prep, CPA stuff, will make up a larger and larger portion of the value prop and the revenue of that book of business. So I haven't fully solved the consulting nut, but I do recognize that the business model is going to be influential there. Guys, did I break up?
No. Your connection's coming smooth. Steve,
Sorry, it was me.
Okay, good. Yeah, I totally get you, Jordan, 100%. So you were basically Profit Coach, lack of a better word. It is the deep discovery stage right now, is where you creating your understanding of what the problems, industry-wide problems are, still needs to have a lot more.
It's evolving.
It's evolving, and it needs to have a lot more meat on the bones before you start systematizing things. I get it 100%. What is the perception? And by the way, there's probably listeners out there in a similar stage of business where they sort of feel the problem and they're right now deep into solving them themselves as an individual consultant, as an advisor, as a service provider. But maybe they're looking to take the next step. What is your next step, Jordan? The timeline for you taking the next step, and what is the revenue mark you give yourself as, let's say, in 12 months? What do you want to be?
Yeah, so those are some really great questions, and I think I can answer because I'm right in the thick of thinking about this. The moment of clarity here is really determining whether or not we are going to be able to ramp up the traditional financial services piece of it. Let's just call it tax and accounting. That is a viable opportunity, and I'm in the middle of discussions with my partner in that business right now to kind of wrap our hands around the scaling opportunity associated with that, assuming that we determine that the unit economics of that business model are attractive enough. Because, let's be honest here, like, I didn't wake up, whatever it was, 12 months ago thinking that running an accounting business was like a life goal or dream, but we kind of backed into it. Assuming we determined that the unit economics of that business are viable, it's going to look like getting as far as we are right now with that side of the business, while using the revenue that we have to do the existing consulting that we're doing to fund the ramp and development of that business. Kind of the long-term, not let's say 3-year target that we had set out for this business was 200 customers. I'd hold by that mark. It's really just a question of, are those 200 people 150 accounting and 50 consulting, or is it inverted? That's kind of the piece that's in flux right now that I'm figuring out.
So okay, Steve, let me just finish my line of questioning here, because I really want to sort of I want to like isolate this a little bit and expose it and examine it a bit. So Jordan, you and I had these conversations, but this is a good platform, for us to dig a little bit deeper, and I think through conversation we both can understand our own businesses better. And so I'm running technically it's a scaled consulting business, right? Because we do marketing, we implement technology, but it's through people, right? So I was able to scale that concept, but through a lot of hard work and a lot of time, a lot of failures. But here's my question to you. This is what I fished out. Assuming viability, and you talk about unit economics for the business, and assuming viability versus targeting viability. What are your, like, so my personal, and Steve, feel free to weigh in here. My personal approach to business is targeting viability versus assuming viability. Because assuming viability, meaning that you let the circumstance sort of discover itself into a business or into a process, into a possible scalable enterprise, where targeting viability is actually putting together the desired unit economics, right? And then figuring out the value propositions and then working on delivering that. What is that gap for you between assuming and targeting?
Yeah, so the customer is going to pay what the customer is going to pay for a given good or service. So let's say the traditional tax accounting services that I mentioned previously, the margin on that business is going to be less than the margin on consulting, and yet the potential scaling opportunity, I think, is higher for that side of the business because it's a utility. It's like plumbing. Everybody needs it. So it's really just a matter of getting the first X number of customers on. Let's say it's the first 10 customers. We have 20 customers right now. Let's say getting 10 customers on the accounting side of that business. That would be enough to inform me that the unit economics are viable in terms of what we need to charge to be able to satisfactorily provide that service at a high enough level of margin. Does that make sense?
Steve, do you agree with the concept of customers going to pay what the customer is going to pay?
Not necessarily. I think the customers will pay if you believe in the value, which we all know. I'm a big believer in value selling. Look, we all go over budget. We all buy nice cars, not because we need a car that's super nice. We buy it because we perceive more value than a low-end car. So I'm a big believer in perception value selling, of value stacking of why. So I guess going to that question, I'll ask you, Jordan, when you're presenting this, what is your point of difference compared to everyone else out there? You're basically you're getting into the coaching and mentoring business is what you're doing. So you've got people that have, there's a lot of people that do this. Obviously, you're so well known in the property management company in the industry, but what is your point of difference when I go, well, why should I use you? And what is your success rate as to the reason why?
Yeah, I think on both sides of that equation, it really comes down to data and context. I have a particular set of opinions. I'm known for, personal brand, thoughts, philosophy, etc. People will like that or they won't like it. But in terms of the objective thing, for me, it really comes down to data and perspective. If I was a former property manager, I would be telling you, when I had my business, this is how we did it, and that's the way to do it. But I haven't done that, and so I'm not saying that. What I am saying is having looked at over 50 companies and their financials and spent over 1,500 hours doing deep analysis on that, what we see on average is X, and therefore that informs my recommendation that you should do Y. That is a unique differentiator that, to my knowledge, nobody else in the industry is able to provide or position against.
So when you stack that with, when you talk about Steve's value stacking, I like that term. I might borrow it for the time being. When you stack that together with your, run of the mill accounting services that everybody needs, don't you think the value proposition you're packaging is significantly more than, an average CPA?
Yeah, and maybe I'm projecting some false humility. I mean, guys, I'm not, accounting is not a new business model. This is not a startup. I'm not questioning the viability of accounting.
100%, but it's exactly it. The humility in business, there's something to be said about humility in business, but business is also has the other side, which is, over promoting yourself and all that. There's somewhere in the middle. All I'm trying to get to is assuming viability versus targeting viability. I think packaging value stacking, as Steve said, packaging up your normal run-of-the-mill accounting services, putting a projection on how many you are able to sell. So in other words, the coaching might be the coaching is not the loss leader, but your initial
top of the funnel.
Correct. The top of the funnel. It's a shorter coaching engagement. You run the assessment on the business. You sort of go deep into their accounting, you help them with some valuable advice, and then you offer them ongoing coaching packaged with the accounting services. Like, I would take that in 10 seconds. Somebody can know my business and give me some financial wisdom along with the actual service. Dude, I will take it in 10 seconds and I'll pay you $1,000 for it a month. No question about it.
I love it. And that's what we're banking on. And the fact that we're doing the National Accounting Standard ties in well to that. So I think we have a lot of momentum right now. It's just that the reality is, at the end of the day, it's not tech. Like, this is humans having to do this.
Nothing to be afraid of. Nothing to be afraid of, Jordan.
Jordan, I got a couple thoughts on this. A couple questions. I personally think that your name and your branding is huge, and I don't think I would downplay that. As a matter of fact, I would go the other way, and I would utilize that your name recognition out there as your point of difference. To me, that is your point of difference. When you walk into an event and people know who you are because of all the things that you've done, to me, you've got to capitalize on that. Your window, everyone's window of fame is not very large, right? It's not a long, the 15 minutes of fame window. You gotta ride that wave while you can. And right now, you guys are high wave. I think you guys are downplaying your branding and the brand that you guys have established. So I think that is a point of difference, just who you are.
Yeah, right? Alex, he's saying you and I won't always be this beautiful. Point taken, Steve. Yeah, I agree with you, and I have no intention of downplaying that at all. There's
the other side of it, though, Steve. There's the other side of this, which I have to admit, maybe I don't want to, but one of somebody spoke at the conference. This is a quick story. Somebody spoke at PM Grow. They've sort of suddenly pushed their service, and the customers who signed up for the service were unhappy with that service. Well, as it turns out, that speaker was not involved in the actual service. Guess what happens? They put because they have a big brand name, they put their brand name on some other service provider, right? So this what you call white labeling or what have you, right, without actually being connected or overseeing customer experience. This is the other side of capitalizing your success. This is where Trump potentially, and say whatever you want about the president, but I'm just saying he licensed his brand and he lost control of it in many ways. So that's the other side of
and that's just that. I look at that as that's a learning lesson for you guys as you go on to say, okay, if someone's going to pitch something or if they're speaking, you guys are now probably going to ask that question: is this yours or are you white labeling it? That's probably a question you guys will ask the next set of speakers that want to sell something. Is
100%.
Yeah, absolutely.
Let me ask you this. Jordan, I got two questions. How do you get the potential client to see the goal of where you want them to go, right? Like you're saying, hey, I can get you to Disneyland, and they're not even seeing Disneyland.
Yeah.
You see it. You see the numbers. You see the potential. How do you – because it's a mindset. It's a mind shift problem, right? It's not a tool set. We all have the same tools, right? You can give them the programs. That doesn't mean they're going to be successful. How do you get them – because – you're only going to be successful if they're successful. If you give them all the tools and you spend all your time and they end up worse off than when they started, they're going to say, Jordan's company sucks. And you're going to go, wait a second, I gave you as much time as I did everyone else. But mentally, they did not see it in themselves. So there is a bit of let's say, adult daycare, coaching, therapist, marriage counselor. All these things have to happen when you're a coach. You've got to deal with those, and you're thinking, shit, man, I'm just doing accounting. But you have to change the mindset initially, right? So how do you do that?
Man, Steve, you're cracking me up here because you're basically projecting your experience, which I can relate to, having hired a coach, right? You think in this situation, it's like, oh no, it's numbers, right? Like, here's the spreadsheet. You need $30 more per door. You got to fire Tom. Like, all right, job done. Go do it. And then it's like later. you come back a week later and nothing has happened. And then you try it again a week later. And it's like, okay, we're not having an accounting finance conversation right here. And it's exactly what you just said. Here's what I would say. First off, it's not about where I want them to go. It's about helping out with the client, helping the client figure out where the client wants to go and helping them to not sell out on that vision. We're all tempted to sell out. I wanted thing A, but I was more confident I could get thing B. So I gave up the vision one compromise at a time. So getting clear at the outset and saying, what do you want to do? Do you want to get to 10,000 doors? Do you want to completely work your way out of the business? That's really step one, is hammering on that and getting the person to take ownership over the outcomes that they want. Sometimes it's a lack of ambition, but Steve, a lot of times it's not. I mean, I've met some reasonably humble people that seemed reasonable that say things like, I want to have 3 times as many doors 12 months from now. It's like, that's going to be tough. Like, realistically, I'm not going to be able to help you with that within the scope of this service engagement. So I'd say it's a combination of getting really clear on what is reality today, what factors drove current reality, what were the rewards and prices associated with the behaviors, the thoughts behind those behaviors, and the stories behind those thoughts and behaviors that drove the results today, and what different sets of thoughts and behaviors will need to be in place in order to get us to the goal. And that's a really big conversation where my job is just to open up possibility.
So let me ask you this now. Let me take it a step further. And this is just my experience of being coached all these years and everything that we've learned and what I teach other people. So it's like, if you go in there to fix accounting and you only fix accounting, it's like you're fixing only one leg of the stool. It's still going to fall. Like, you have to get the foundation. So let me ask you this. Do you ever talk to them and say, okay, what does your organization chart look like now? And what does it look like when this business is ready to be sold? And they may look at you like you're speaking another language, but you're building the foundation. And then the next question is what are the roles in the company? Do you have a role with each position? Do you have KPI? Like, and you're going there to be an accounting coach, right? You're going there to fix their accounting. But now you're going, well, shit, I got to fix this base, because if not, it's just going to topple. It's going to fall on its own, because accounting isn't going to make the company grow, right? They'll know exactly how much money they're losing now when they know accounting, basically. So
yeah.
Is that something that you thought of doing to establish the base?
For sure. I mean, the forecast for us looks like it involves revenue, profit, and people. So as you ramp and scale, who you're going to hire at what stage. But I think a rich conversation that three of us could have is related to profit versus growth. Where on the nexus of trying to scale this organization do you reinvest that profit? You can absolutely overemphasize profit, right? You could just rape the business, have no leadership in place, or you can overinvest and you're always staffed for growth and the growth never comes. That's probably the nub of the conversation that we're still trying to suss out. Alex, you've heard me say with great confidence that profit is a discipline, and the time for the discipline is now, not at scale at some time in the future. That's a big part of the conversation to have with our clients is, are you committed to getting profitable? And if so, what prices are you willing to pay? Maybe that means that you need to stop running personal stuff through the expenses. There's somebody on staff we need to let go. You must figure out how to go back to your 300 existing clients and explain to them that there's an additional $25 monthly upcharge coming, whatever it may be. Here's what I would say. Your intention will always trump the mechanics of the specific thing we have to roll out.
Yeah. Alex, I'll let you. He seemed like he was talking to you for a minute there, so I'll let you answer this.
Well, I want to do like a nice punch in the face kind of a thing, like punch in the mouth. because I know where you're trying to go with this, Jordan. And I want to go there with, but I do have to make this little bit of a punch. And look, in my method is one method, but I want you guys potentially to pick at it, because I'm also open for recommendations. To me, see, that's the thing. So when you were talking about, so Steve is asking you a lot about coaching stuff, and I'm like here thinking, okay, how is he going to structure that, packaging that with repeatable process that delivers value, and then target specific growth rate and go after it, right? That's what I'm thinking. And to connect it to, like, when you say coaching, and then you have open-ended vision for the customer, where you want to go, Mr. Customer. Well, that's not always the thing. Like, with Steve's business, he has a very specific customer type. Right? I think there's variance between that customer type. It's an active investor. It's maybe a little bit less active investor, but it's a customer type he's going after. His fee schedule fits. His system service. And if he goes and gets a client that does not fit that portfolio, a big multifamily owner, or one guy who wants to take care of their own maintenance, and because their own repair guy, Steve is not going to be profitable, and he shouldn't take that business. Do you agree, Steve?
Yeah, you got to pick a lane, man.
Pick a lane.
Yeah, we all agree on that.
Exactly. So this is where I'm going with this: assuming viability versus targeted viability. Targeted vision versus open-ended vision. Mr. Customer, what is it that you want to do, and we'll help you solve all those things. See, the thing is that there's other people that can solve other things. I think we got to get really, really good for a very specific set of clients to solve very specific problems, but do it in an outstanding way. And I think that's the way to put together a scalable service/technology business, a hybrid, right? If you're just doing technology, you know how to do it. But with tech, you pipe some capital into it, and you can grow. Like, unit economics are known, that stuff. But there's also something to be said there on the LeadSimple side. I think it's got a lot of opportunities. You know that. I know that. But on a service/coaching side, I think you got to pick your lane, as Steve said. What do you think about that?
Our lane is profit, man. To be very clear, our lane is profit. So there is a certain line. Open to your suggestion, but in my way of thinking, profit is enough. If you want to retire and get out of the business, if you want to get to 2,000 doors, regardless of what your goal is, profit is the oxygen that will get you there.
100%, but I didn't mean that. Sorry, I didn't mean to dismiss the profit. What I'm saying is there is probably 32,000 property management companies right now that want to be profitable. Is Profit Coach going to be the right solution for all of them?
No, definitely not.
Hell yeah. That's your lane, right? So who is it that you can solve the specific profitability problems to? You want to solve it for a 100-unit guy who's Steve Crossland, right? He doesn't need you. You want to solve it for Steve, who's got coaching up to kazoo, who's like married to, all these other relations, got all these relationships, and probably not, right? Who's your customer?
The customer is really folks that are not profitable. So there are occasions where we come across somebody, and this is rare, but I came across had a conversation with a guy in the Northeast the other day, and he's like at 40% profitability. And it's like, if you want some hand holding, you could sign up and it would be great. But there's a significantly felt need versus the guy that's operating at 4% margin, and he's been there for 3 years, and he constantly says it's going to change, but he's kind of tired of that, and he's ready to bring in some help. So
if you want to cure the sick, I'd say open a nonprofit, man. But if you want to do business, I think working with people who are able, you got to pick your lane. Steve, I'm going to stop for a second and let you take input on this one. But it sounds like with marketing, the same thing. Like, if I take a client who's not, you just said that, and they come to us and say, we want to grow by 200 units next year. Okay, let's take a look at the leads last year. We'll look at LeadSimple. They had 14 leads a month average. Their closing ratio is 11%. And they want to spend $500 a month and grow by 200 units. Mike, can I help that client? No. That's, I need to open a nonprofit to educate, to really bring them to this growth. Right? Steve took years and years to get to this position. Steve, what were you going to say about this?
Well, what I was going to say is going back to what Jordan said. I have a feeling like you guys are actually talking about two different topics, I'm going to say. But I think what Jordan's saying is you should be in the business for profit, which I obviously agree with, right? However, the part that we may disagree on is if the plan is to grow your company exponentially for a goal, then something has to give, right? You cannot grow the company unless you're going to take outside funds. You're not going to grow the company and have a 30% profit margin if you're trying to grow at an excess rate, as long as it's part of the plan. If you're losing money to lose money and you have no idea what the fuck you're doing, well, then that's a waste of your time and you shouldn't be in business. But if you're doing it specific, like we talk to our business coach, right? And we'll say like, man, if we didn't have Dallas, if we weren't opening up Dallas and we weren't spending X% of revenue in marketing and we weren't opening up, now we're opening up Austin. If we weren't doing all these things, we would be at, X% profit margin. And he says, you don't want these problems, don't grow. Stop growing and you won't have these problems. But what's your goal? Your goal is to grow your company. Your goal is to license your business across the United States. You want to do that, this is part of the goal. So as long as it's, my whole point of this is, as long as it's part of the plan, I think what Jordan was saying is a lot of these people don't even have it in their plan. They don't have a plan. They don't have a vision. They don't have a plan. They don't have the org chart. They don't even know what they're doing. They're just surviving.
Exactly. And that's why they need targeted outcomes, right? They need specific, Absolutely. They need to connect. So Jordan's company, Profit Coach, connects to, all right, you are at this level. We are exactly the people to take you to the next level. Oh, you're not at this level yet. Well, here's some tools and education to get to this level. Then we can work with you.
Right. You can cultivate that. You can cultivate that client down below. Say, you know what? You almost put them in an incubator so that you educate them and you incubate them till they do get to the level that you need them at. Because, you incubate enough, seedlings, they're going to grow, right? You're going to have some that grow that give you that return that come back and say, you know what? You helped me with so much education in the past. Now I'm ready for you. And I think that
we do that a lot.
And I think that's great.
This is exactly. Grow your pipeline instead of, go spend all kinds of money through education. Jordan, you're already doing that. I guess just to sum this all up, all I'm saying is like picking a lane for a property management company is extremely important. When we have a perfect client conversation with a customer, they don't know who their client is. Like, we'll take anybody. It's very, very difficult. We can't make their identity. We can't do their branding. We can't infuse any kind of conversion tricks or conversion principles, best practices into their brand, into all of their marketing campaigns, because they're just everything for everybody. They're vanilla.
So Jordan, Alex, let me ask you, how do you get someone that when they come in and they go, man, I want to do it all. I want to do it all. I'm the end all be all of property management. How do you sit there and get them to get these layers off to go, look, you got to pick one. You're going to be shitty at all these things. You could be good at one or shitty at a bunch, right? So how do you get them to understand that? Because as soon as they hang up with you, they go, that Alex, he doesn't know what he's talking about. I'm getting someone else that listens to me, right? They just want someone to say you're the smartest person in the world. So how do you do that, but also make sure you're not wasting your time taking on a client? And probably the same thing for Jordan, right? You got to make sure that you're evaluating your time. And before you answer that, I've got a question maybe for both of you guys. How do you estimate time per client? Like, how do you, for staff time per client, how do you estimate that? Because you may look at this guy and go, you know what? This is a 20-hour guy. I need a 5-hour guy. So first question, second question.
Jordan, can I take this? I have.
Yeah, I'll defer to you on this one.
Bit of a background on this one. So question number one is, I'm obsessive. Jordan knows this. Steve, maybe you know this. I'm obsessed about discovery process and fit. Our conversion, I'm not even going to tell you what my conversion ratio is on leads. It's super low. So if I had my clients right now, like, know what my conversion ratio is, they'd be like, hypocrite. You telling me I need 20%. You're converting at a much lower rate. But it's intentional. We don't want to bring customers who don't, because it's just a bad outcome. They spend $6,000. They get 4, 5, 6 properties, but they don't think of it as a lifetime value or as a momentum. No, it's like total like $6,000 equals 6 properties within the first 4 months of our service. Not good. This is bad. Rip off. Blah blah blah. I don't need that relationship, right? I don't need that. So for me, I have to channel them into the seedling round, right, where they can get educated, and then when they're ready, they can go. And so we could get better at that education, but discovery and insisting my salespeople are absolute. Like if they don't feel it's a fit, they're not going to push the deal. we're not going to push the deal because it's going to pop out on the other end. It's going to cost us a lot of money. Second question, let me have Jordan address the first question, then we'll go to how to estimate time per customer.
Can you just articulate what the question is just around qualification?
Yeah. How do you make sure you don't get the wrong clients in the door, right? Steve, that was.
I think the question here is around whether or not somebody is actually too early for coaching. That's really the question, is how to determine if somebody is coachable. When folks come to me thus far, I haven't run into a lot of situations where the wheels fell off. Alex, you're further down the road. You know what those warning signs are of what is outside of a customer perfect fit. I'm still learning that. I can articulate a certain size of scale, let's call it 100 doors, and attitudinally, I can certainly say the person needs to be willing to learn. But I think there are definitely some kind of overall signals that you could look at to understand if a person is ready to be coached. And that comes up in the discovery process as well. Is this person open to suggestion? Do they want to ramrod you? Do they have excuses for why third-party circumstances are responsible for where they're at? There actually is one client that I had a conversation with 2 weeks ago, and it kind of made me wonder if this person is actually ready for coaching. But I think that's more the conversation for me is this person willing to audit their own behavior and embrace change? That is the nut of what determines viability for consulting at the stage of what I'm doing. That's as far as I've gotten.
Gotcha. Yeah. So I'm speaking of the future as you articulated as marrying a traditional accounting / CFO, because you just basically labeled your own company, the Profit Coach, as this outsourced CFO services, right?
Correct.
You've articulated that. And Steve, welcome back. And the challenge is you keep talking about coaching. I'm already looking forward to the business as a combination of the two, right?
Sure.
That's where you need. And so
sure.
They're ready for coaching. Of course they're ready for coaching. But the question is, are they ready for your coaching? Right? Can you help them within your knowledge lane, within the lane of where you are absolute expert? Steve, welcome back. You're absolute expert. Can they be ready to help? Like, can they be ready for you then? Not just a coaching, because then you can. A lot of people are ready for coaching. They actually desperately need it, but your coaching.
Well, I mean, yeah, that's a great question, and there's a lot to figure out there. I mean, the entrepreneurial optimism in me says yes. I think I'd probably just need some more bumps and bruises on that front to get less radically optimistic than I feel right now, Alex, if we're being honest.
No, I think you're going to provide a much needed service, and I think you're not moving fast enough. In my opinion, you are too human. You're diminishing your ability to execute on that front by basically overestimating how much information you need to have to drive outcomes. I think picking a lane is where it's at for you. I mean, literally, I think picking a lane, focusing, okay, we're going to solve this problem for this customer, right? And then not try to go outside and do all these discoveries. Oh, this is, this been running a company for 3 years with -4% profitability. Is that your customer? Like, really? They don't know their own, like 3 years is not enough to, kind of understand that.
So just to make sure we're understanding each other, I'm saying I don't view there as being a lot of constraints in the people that we can help right now. So picking a lane is great, but I have not found a significant number of lanes that do not work for us yet. I'm sure I'll discover some of those, but right now it is broadly working with companies that look very, very different from one another.
Perfect, because it's all you now, right? 100%. We're talking about scalability, but anyway, I think I got exactly where you are. I think you're in a deep discovery. I think it's a really fun journey. I think this is the most amazing time in the business. Let's go to question number 2. Steve, how do you estimate time per customer spent?
That's a good question. I don't know if we do. Well, let me take it back. We equate it to property manager staffing time, right? So, we're going, how many doors can each property manager manage, right? So we're going to average them out. So because we do a lot of outsourcing with outsourcing services, the average is maybe from what I understand, the average is maybe 120 to 170 doors per property manager. We're up to about 200 or a little over 200 doors per property manager because of how we outsource a lot of our services and tasks. So we have a different SKU, and we'd like to get them up to 250 to 300 per portfolio. So we're still figuring what we need to offload to do that. So as far as a client, that's on the BDM side, and we're creating stuff that we're doing internally. We're creating we call it Empire Academy. So I'm creating a full knowledge-based library for internal training, script training. I've got about, by the end of Q4, I should have over 500 internal videos that will be quizzes and tests for internal usage, for staffing, for training, for recurrent training. But part of that goes over, going back to your point, Alex, is one of those questions we do is, should you sign up this guy? What are the red flags that you get when you're talking to a potential client that you're going, you know what? There's a lot of red flags popping here, and am I just creating a problem for operations by taking this client and dumping it over there just so that I can get the close? Because everything we do in our company is KPI'd. Even the person answering the phones has KPIs. We want to know our call rate. We want to know how many rings. We want to know average wait time. We want to know everything. Everything has KPIs in our company.
That's awesome.
And so part of that is the property managers. You know, how many upset owners? How many owners have we lost? Why have we lost them? What's the reason? What's the root and cause? So we track everything, and then, you know, we do a whole leadership meeting, and then those things get filtered up, conditional, red or green. If they're red for 2 weeks, we put a spotlight on it saying, we may have a problem here. We need to put eyes on this. So we try to be very systematic in our business through we don't do anything per the person. We do it on what the role is, and we track it per the role. So it's kind of a long question for you, but we don't know that we have a problem until the numbers are dictating we have a problem, meaning staff hours and this and that. And then we start by saying, okay, where is this person coming from that we're marketing? Where are we marketing that we're getting this kind of bad owner? And maybe it's a certain marketing source that we're doing, saying, okay, we are continually getting bad owners from this type of marketing. We need to stop this marketing or change the message. So we kind of take it all back to, we don't want to just say we don't want to take that owner. We actually want to take it a few steps upstream to say, what is causing us to get that owner? Do we have a bigger challenge? Because we all know marketing. We're paying an acquisition cost per lead, per door, per strategy. We know what all those are. We're trying to get that number down to a certain number. But if we're converting those clients, but they're bad clients, well, that's great.
Value suffers, yeah.
Yeah, they love our service, but we don't want them. And then we end up kicking them out or firing them, or they fire us down the road. It was all for nothing, right? And it was a waste of marketing dollars to do that. So that's how we test and measure ours, because
that's really good. So you mentioned there the segmentation on a per channel basis was great. I think segmentation is key. However you want to segment, you could tie it to customer lifetime value, and that relates to the thing that you mentioned previously, that conversation about profit versus growth. We look at customer lifetime profit before sales and marketing. So Steve, I want to bet this number against you. You get the dichotomy between reinvesting in growth and seeing that return and saying, hey, it's worth it, it's not worth it. What do you think about using customer lifetime profit or profit per unit before sales and marketing as being kind of an equalizer to look at that really aggressive company or the company that is significantly less aggressive, and to understand the efficiency of their business model? Do you think you can make an apples to apples comparison by using that figure?
I would say it would. I hate to say like a big picture. It would depend on what the goal of the company is. So if the goal of the company is world domination, and they just want to dominate, then
there's only one of you out there.
It isn't going to work, right?
And he's here.
So, let me just one thing, Jordan. I was going to say that we actually, and look, we're a young company, 6 years old, and we try as hard as we can to grow, and we're constantly learning, and we love listening to people, listening to you guys, and because everyone has a different perspective, right? you may look at something and go, you know what? And we're going to go, what a great idea. Didn't look at it that way. But so just to give you an example, we have a new sales manager that came in. And so we're sitting there talking about, we want to get more doors. We want to get more doors. Just to give you an idea. So far, I think for the year, last year we did 361 new doors. Right now, I think we're at about 260 so far for the year. Our goal was 500. We're a little bit trailing. However, with the new sales guy, our average numbers, profit, cost, everything is increased on the doors because he doesn't give on management fees. He doesn't give things away. So he's like, he had a question the other day, which is this something property managers should think about. He said, we're so worried about doors, but he goes, we don't put any emphasis on how much revenue per door we're getting. Why aren't we tracking revenue per door? Because that's the main reason we're doing this. And we all sat there and thought, that's a pretty good idea. Never thought about it. He's like, we're making more. And what he does is he actually, very, very smart guy. But he took a spreadsheet and said, look, he took all the parameters that we could charge or not charge and fees and ancillary costs. And he said, look, if we take this and let's say we average it out over a 2-year span, there's things that we can give up on the front end that don't hurt us as much financially. They seem like they're a big deal, but actually if we stayed, like let's say we don't give up the management fee, but we give up some of the leasing fee. And he's like, if you average that out over a 2-year span and what number we want, he made them conditional. He's like, it's red or green. So he goes, we can say, yeah, you know what, this rent, we can go down to 7% management fee, whatever that number is, and we're still in the green. But if we give up all of the leasing fee, now we're in the red. So he's like, we have to look at all the revenue. Like we never really thought about it. We're always thinking door, grow. And he's like, wait a second. We have the KPIs for we know how many leads come in, right? We know how many of those leads are actual opportunities. We mean a lead is someone who says, what's real estate, right? And then from that, an opportunity is someone that has something that we can manage. Then we want to know, okay, and these are all things that we track, right? Next thing is how many of those opportunities turn into meetings, right? And we have red or green conditional. How many of those opportunities turn into doors, right? Or how many of those meetings turn into doors, right? So then from there, we're normally like, okay, we know our numbers. So his point is we know what our conversion rates need to be on all the way from the time someone comes in, because then, we're doing each strategy, Facebook, manage my property, all these other things that come in, and we're tracking everything. So we know which one's working, which one's not working. Marketing has to have a certain amount of conversion from lead to opportunity, because that's conditional. Because if all of a sudden they're going, yeah, we're getting a lot of leads, but they're no good, that's a marketing issue. That's not a BDM issue. If all of a sudden marketing's going, wait a second, my numbers are good, I'm green, we're not getting the doors. Now we have a sales issue. And we say, okay, why are we not – I take it back. Because we have our team in Mexico, our outsourcing, they're the ones who actually set all the appointments for us. So if we say, wait a second, we are not at a 90% appointment setting, what's the challenge here? Do we have a script challenge? That's the challenge there. So now we can track that. So all of a sudden, if they're green, then it keeps getting pushed down. And we say, okay, now we're there. Now we're not closing the doors. Now do we have a phone challenge with the scripts, or do we have an in-house appointment challenge with the BDM? And so we're able to actually micro segment it down to say, oh, we're not closing enough doors. It's like, well, wait a second, where is the problem in the channel? And it's just a matter of, and you guys know this, when you track it down and break it down, now we're sitting there saying, okay, you know what? We were saying, okay, well, we want, our goal was 47 doors a month. That was our company goal, 47 doors a month. So all of a sudden the new guy comes in and he's like, well, we may not be hitting that exactly. He said, however, our numbers of revenue is way higher than we've been. And we thought, he's like, why don't we track that? Going back to the profit thing. So it was an eye-opener. I think as entrepreneurs, Alex, Jordan, I think all of us, we get so tunnel vision in focusing on one thing that when someone else says something else, you're kind of like, they almost has to pull you out of the weeds, out of the hole to go, hey guys, you ever think of this? And you're just, at first you're just like, you may even get upset. Like, how dare you? I'm focused. But the reality is you sit there and you start thinking about it and you're like, well, actually that's not a bad idea. Something to look at, And so to us, that was a big eye opener that he saw clear as day coming over.
That's great, man. Somebody else's context is always useful. It makes me think about in software where MRR, monthly recurring revenue, how much MRR did we grow each month? That is the metric. And customers is, obviously relevant as well. But in the software realm, MRR is the thing that you track on a monthly basis.
Yeah, dollar per contract as well, size, because, dollar per contract, average dollar per contract is important in the lifetime value. And by the way, Jordan, go back to your question. I think lifetime profit before sales and marketing is actually a pretty cool indicator, and you can do a lot with it. I actually like that idea. The other day I was trying to figure out mine, and I think I got there. But I wanted to run a couple more. You gave me that idea, so that was good. I want to run a couple more statements to get more clear on what that number is for me. But let's we're kind of 55 minutes in. Let's get some coaching done for ourselves as well.
Yeah, we just did, man.
Well, yeah, true. But let's set out. Let's send ourselves on a journey of a successful week, right? That's the whole point. We're doing this. We're getting this on Monday. We punch the Monday in the face. We talk about some hard issues. We don't hold back. And also, I want to start, as we agreed, talk about top 3 things I'm going to accomplish this week. Jordan, you want to open us up?
Yeah, I'd love to kick it off here.
Top 3 things you're going to knock out this week.
Here are the 3 things. The first is hiring an executive assistant. I've done 7 interviews over the last 2 weeks. I have a number 1 and a number 2 candidate. Got to finish doing some reference checks, but that is a hire I want to get in place by the end of the week. And they'll probably start 1 to 2 weeks from Friday. Second, point number 2 is launching PM Grow. Side note, or a little insider secret, depending on when this comes out, we're targeting Austin in April. Write it down. But launching PM Grow by the end of the week. And point number 3 is reviewing the new operating agreement that I'm working through with my business partner, which is a big one and an exciting one. But doing a full walkthrough on that by the end of the week and sending feedback to my business partner.
Very cool. Steve.
Oh man, I don't know if I can match that, man. You're putting me on the spot now.
You do you, Steve. You do you.
All right, so I've got my 3 things. I'm continually focused on this Empire Academy. I've got to do 25 videos. That is my carrot for the week. Every week each department sends me 3 videos. I got to put them together. I pick 25. I knock out 25 every week.
I'm putting you down for this, Steve, by the way. You'll be accountable next episode.
No problem. This one, I just threw it out there. I'm actually heading to Australia tonight, and I'm doing a speaking event in Melbourne. Working with some offices. So I've got that event. Does that really count?
Yeah, you're going to accomplish this, right?
That's the goal. As long as I make it there. And the next one is I need to create the outline for our acquisition and roll-up strategy for new cities.
Oh, wow. I'd like to go over that next episode.
I would too.
So that puts you up against the wall. Okay, my 3, I want to finish out leadership team priorities document that I'm going to turn into scorecards. I'm still not where Steve is. We do a lot of things in terms of estimating time spent per task and then consulting per customer. So we know our cost structure very, very well. But I have not done as well on what Steve has done. And basically we're now more or less sort of implementing the EOS, Entrepreneurial Operating System. And I got to finish leadership priorities doc that we're going to turn into scorecards and then iterate. So the idea is each executive, each leader will have their own priorities that will be turned into a scorecard, and then their scorecards will roll up to a company scorecard, kind of like what Steve does, but we're in the first iteration of it. Second, lunch PM Grow, of course. We have everything laid out. Jordan and I got to punch this in the face this week. Steve is already our speaker. He graciously agreed. And so we're going to talk about some awesome stuff. The theme for this year is awesome. There's going to be a lot of innovation coming from this conference. Very excited about that, but it needs to get done. And, that's the time.
Well, what does that mean, done? Like, how do you define that deliverable done?
And notifications, emails, social media, just launch, right? Launch. It's not like we're not doing a parade per se, but it's sort of like digital parade, right? We're on. And the third thing is I actually want to explore some financing options, debt financing for the business. Just want to see what the rates are out there, what kind of amount we can get approved for as a business based on our revenue. And we don't have any debt on the business, but I want to see what, if I get a credit card, how much can I get? Because if I see a highly qualified engineer that's a perfect fit, I want to be able to pounce on talent versus having just like, oh, my revenue needs to catch up. I got to wait another 3 months before I can afford you. I can't do that. So I want to have a little bit of a credit card on the business to see what the rates are and what the conditions are. So those are my three.
All right. So when do we turn these in? We discuss them. We get it from Jordan this weekend, and is that the plan? And then you and I discuss it first thing next episode?
Jordan. Friday, 5 p.m., guys.
Ooh. Well, some of us work on the weekend, by the way. Not me, but some of us. Jordan, email that in on a Monday morning if you don't mind, so we can cover that during the next episode. And Steve, you and I will just hold each other accountable. Monday is at this time. I think 10:30 a.m. is where we're going to record these, post next Monday. That's the idea. And
so you guys email me your results on Monday, and I will reply back with where I'm at.
Fair enough. I think that's fair enough.
All right.
That's fair.
You know what? How about this? Would you, Jordan, like to come back next week? I think we have more. Unless Steve, you have another guest lined up.
No. I think I'd love to continue this conversation. I think we can all. We can talk more about PM Grow and what you guys are doing. We can launch that. And I think we have a lot of depth. We probably have about 10 miles of depth, and I think we probably went a quarter mile in. I think that's it. That's an accurate assessment.
Oh, man, this sucks. I wasn't actually planning on doing the stuff I just told you guys. Yeah, it sounds great.
I'm not talking to you guys again. Maybe you got my email? That's weird.
All right, great. Let's take it full circle.
Let's have a continuation to this. And gentlemen, it was a pleasure. Everybody's listening. Thank you kindly for your time. We only hope to make ourselves and everyone else better. Yep. Thanks so much, everyone. This is great. It's a good start. I think everyone's going to like this podcast and where this is going, because it's this information. You don't just get this information by going to a seminar or anything. You get this information by this kind of conversations with some great, very, very intelligent guys like Alex and Jordan. So Jordan, hey, once again, thanks for taking the time. I know how busy you are. I personally appreciate you spending time with us today. Same here. It's a pleasure. Same channel, same dial. Tune in next time. All right. We'll see you later.